Hi guys, welcome back to the Financial Interest YouTube channel. My name's Dan. So in this week's video, I'm going to cover inversions and rebuttals and how to find the risk factors before investing. So this is a concept that I learned from the Invested book from Danielle and Phil Town, and also from Phil Town's Rule 1 workshop as well. So if you haven't read it already, I definitely recommend checking that book out. It's like gives a really good kind of simple to understand guide into developing a learning process for investing. So let's get on with the video. So first we need to look at how inversions and rebuttals fit in with the whole process of finding a company to invest in. So I kind of follow Phil Town's 4M's approach, which is meaning, moat, management and margin of safety. So throughout the time we've kind of been looking into companies, we're looking to make a story really. Does the company have meaning to us? Is it something that aligns with our own values? So that's really important because we need to be interested in the company to have the desire to do the research really. So first we have to get the meaning, and then we look into the moat of the company. So it needs to have a competitive advantage which allows it to grow its profits over time. And then we also need to look into the management to make sure that they're aligned with our own thoughts, and they're also like treat the shareholders like part owners in the company like they should be. And also, are the management team good at allocating capital to grow the business? And then we'll look at the numbers, come up with our valuations, like a price with a margin of safety, and just make sure that we kind of thoroughly understand the business as we go on. So a lot of this process is kind of looking for reasons why we want to buy the company. But of course, like in anything, we need to do our due diligence to make sure that that we know the risk factors associated with the business. So that's where the inversions and rebuttals come into this. First, we're looking at the reasons why we want to invest in the business. So now we need to kind of flip that around and look for reasons why we shouldn't invest in the business. And we can find information for this in a number of different places. The best place to go to is the company's 10K report, which is an annual report that all companies in the US have to file. And within that filing, the company is actually legally required to mention the risk factors associated with the business. So if you go into the 10K, you'll see where all the contents are listed. Firstly, we'll have like the general overview of the business, and usually the second point is the risk factors. So this is good to take a look, and then this will kind of give any risks that you're likely to face with that business. And at the same time, there's other places such as articles on Seeking Alpha, Motley Fool, Yahoo Finance, and then there's also if you pay any subscriptions for like Barron's or Wall Street Journal as well, you're likely to get a kind of balanced view, because of course there'll always be opposing views as well. So that's always good to look for those. And then in terms of the rebuttal, obviously this is a part where we need to then look at the argument we've made against the company, and then come back with reasons why they will overcome this. So we have to rebut that claim. So this is how we counter the argument to kind of go over how we think that the company can overcome any hurdles that are in the way. So let's look at why we invert the story. So we need to check the risk factors and things which could go wrong with the business. We need to know that the company's moat is strong, it's not shrinking, the numbers are still good. We believe in the management team. Also, would a change in the management team significantly change the story that we've come up with? And we need to make sure that we're not suffering from confirmation bias. So confirmation bias is the tendency to interpret new evidence as confirmation of our existing beliefs or theories. So if you look at any business that we're kind of done a lot of research in, and we're quite excited to own that business, of course, kind of naturally we start only seeing the good points of the business. We kind of might get blind to just seeing the good points and not being able to look at any of the negative points of the business. And this is where it's key to, like, ideally if you've got a partner or there is someone else you can bounce ideas off, because maybe quite quickly they would be able to tell you, well, did you think about this? Because this is a stupid idea. The classic for this is Warren Buffett and Charlie Munger. So Warren calls Charlie the Abominable No Man because he said no to so many different ideas that Warren's had over the years. And like I said before, sometimes other people can instantly pick holes in something which you've been blind to due to your bias. And another reason we invert the story is we need to spot any problems with the company that we may have missed during our initial research, and also to ensure we understand the business as well as we think we do. And now looking over the rebuttals, we need to be able to give a reasoned argument that the company can manage and overcome any risks or challenges that it faces. So this is the counter argument as to why we should still buy the business. And this needs to be based around factual evidence wherever possible. So it makes sense if the company's faced challenges before and still overcome those challenges, that it makes sense that they'll be able to do that again and come out the other end stronger. And this is why we want to see that the management's got a track record of being decisive when making key business decisions. And we want to be able to have 3 reasons we want to own the business, and then we'll go and then look at the inversion for those 3 reasons and also the rebuttal as well. So just to demonstrate what I mean here, we'll take a quick look at Visa as an example. So here's some reasons I put to own Visa. So I believe that cash transactions are going to continue declining in favour of digital ones, and Visa are well positioned to take advantage of this with their existing network. And they've got a proven track record of growth over many years. And there is still quite a good path forward with growth in emerging markets such as India, Africa and South America. So moving on now to the story inversion. So one of the risks is Visa could lose market share to its rivals such as MasterCard, American Express, PayPal, and then other new technologies which are still coming online. And another one would be that Visa's growth could slow down. And also it faces regulatory risks in countries for anti-competition and high fees. So those are the inversions to the story that I've got there. And now let's go and look at the rebuttals for those claims. So Visa is well diversified and has a presence in more countries than its rivals. And as Visa becomes larger, I expect the growth to slow, but the emerging markets represent a good opportunity to maintain growth going forward. And even if the fees get reduced, I still believe that Visa's research and development would be able to open up new revenue streams to compensate for that. So that just gives an example of the kind of things you're looking for when you're doing the inversions and rebuttals. So first you need to look at the reasons why you want to own the company, and then you need to flip that around as to why you shouldn't own the company, and then the rebuttal to make the counter argument of how you believe that the company will overcome those issues should they arise. And now we'll go and look at some of the key points as well. So inversions and rebuttals are there as part of a final check to make sure that we're certain about investing in a company. If you cannot confidently rebut the argument against the company, then you shouldn't invest. And remember here, we don't have to invest if we're not certain. If there's uncertainty, and maybe this is a company that we should keep on the watch list while we look into doing more research. And of course, if it comes out that the company is too hard to understand, we can always put that in the too hard box and then come back to it later. Perhaps further down the line, we're going to have done more research and it's going to fit more within our circle of competence. So that's it for the video. I hope you enjoyed it. So if you did enjoy the video, please give us a like. It really helps me out with trying to grow the channel. Also, if you're not already subscribed, please consider subscribing to the channel if you enjoy the content and other content like this. And please hit the notification bell as well to get notified as soon as I release new videos. So thanks for watching, and I'll see you in the next video. Cheers.